Hi, I'm Whitney Espich, the CEO of the MIT Alumni Association, and I hope you enjoy this digital production created for alumni and friends like you.
Welcome to the SEAG webinar, Invest for Impact, the Investor's Perspective. I am Sayuri Sharper, President of MIT Social Entrepreneurship Alumni Group, or SEAG for short. Your host today will be Vera Schroeder, who is an associate at Safar Partners. She graduated from MIT with a PhD in chemistry and is also an officer of SEAG. She has put together an impressive panel and will introduce them when I pass it for her to start. A few logistics for the session. Vera will lead the initial discussion with the panelists. If you have questions, please use Q&A button to type them in. Vera will get to these questions after the discussions. So let me start with a few words about the MIT SEAG. SEAG is organized under MIT Alumni Association, and our mission is to bring together MIT alum and like-minded people to co-create a better world through social entrepreneurship and impact investing. I'm often asked, what do I mean by social entrepreneurship and impact investing? So here are my definition. So social entrepreneurship or social enterprises are organizations that address a basic unmet need or solve a social environmental problem through a market-driven approach. So the market-driven approach is what is different for these activities versus some of the typical activities that are done by NGOs or nonprofits. For impact investing, it's investment made in companies or organizations with an intent to contribute measurable positive social or environmental impact alongside a financial return. And again, here it's based on intent, contribution, and something that's measurable. So that is the definition of impact investing. And within these definitions, it could be a broad range of activities. So they're not constraining so long as they have these features in the enterprise and in the investment. Next slide. So how do you engage with us? The best way to engage with us is to join our community platform, and it's mit-seag.mn.co. And membership is open to anyone who is supportive of our community mission. And so why would you want to join? Well, I think the best part is to hang out with like-minded people, and then we can share, learn, and support each other's journey. And we'd like to be a vibrant community to build a better world. Next slide. So here are some of our upcoming webinars. On October 21st, that's next week, we'll have case studies of 3 exits for African social enterprises. And in this session, we'll have 3 African social enterprises that have achieved exit, and they'll tell us about their journey through the whole process. And then November 5th, we'll have Roseanne Whaley, who is the CEO of AHL Ventures, talk about what the landscape of African venture capital investment is. So you're all welcome to join us. And if you want to be updated on our programming, please join our community platform. Now let me turn it over to Vera to start today's session.
Hi all, thank you for joining us. I will be hosting and moderating the panel on impact investors. I'm joined by 5 wonderful panelists that I'm going to ask to introduce themselves shortly. So if you could introduce you, talk a little bit about the funds that you're working for and what impact investing means to you shortly. I'm going to call on you in the list that I see you on my screen. So Michael, if you could go first.
Sure. First, thanks for having me. It's an honor to be here, and I'm excited to speak with you all. So I'm Michael Campos. I'm with Prime Impact Fund. I'm an associate on our investment team. Prime Impact Fund is a seed stage venture capital fund investing in breakthrough climate technologies at the earliest stages. I come from a technical background. I was trained in chemistry, and then spent 2 years at the Department of Energy's Advanced Research Projects Agency before making the jump to Prime Impact Fund. The challenge that we encountered at ARPA-E within the Department of Energy was that undergirding all of the R&D projects that we would fund, we would fund kind of crazy out there ideas that are, that would be impactful if successful, is that undergirding everything there was a big financing gap that we couldn't directly address. We'd fund academics, national labs, startups, and corporates, but often there was no widely known next step for a successful project in the way that big pharma has phased trials and in the way that software has tons of venture dollars flowing in. It became clear that there were excellent technologies and interested capital providers out there in the long term, but the right investment structure hadn't been set up. What we're doing at Prime is building that right investment structure, a new asset class within venture capital that structurally aligns impact and long-term returns so that the game-changing early stage companies out there have a next step. So what impact investing means to me, basically building the pillars of a future low carbon economy that we'd like to see. We look for 3 things in our investments: gigaton greenhouse gas emissions reduction potential. For reference, the world emits on the order of 40 gigatons of greenhouse gases a year. So anything that can be measured at the gigaton scale is of interest. Additionality: are we filling financing gaps for otherwise promising technology companies that could die on the vine if not properly supported at early stages? And third, attractiveness to follow-on capital. Our goal is not to launch companies into a void where there's no other form of financing that could pick them up, even if successful. And so we look for opportunities for companies to then launch into the venture ecosystem or develop early customers or seek other types of financing. So I'll leave it at that. Looking forward to the conversation.
Thank you. Julia, do you want to introduce yourself and what impact investing means to you?
Sure, sounds good. Hi, everybody. Thank you, Vera, and the group for having me in. My name is Julia Monfrini Peev. I'm actually a graduate from the neighboring school, the Harvard Kennedy School. I took a few classes at MIT to stretch my brain. I was attending John Sterman's class on system dynamics. I stretched like, cellophane of a leftover. But it was certainly enlightening to meet so many motivated entrepreneurs over there. My personal background, I have spent 11 of the last 15 years investing in healthcare, in private equity and venture capital, have deployed about $1 billion of funding at this point in time in transactions, big and small. And as we all know and have now seen more clearly, the healthcare system is really 10 years behind in terms of tech adoption. I think if anything, COVID-19 has highlighted the weaknesses of an otherwise mostly analogous system. I am now a partner at a firm called Pace Healthcare Capital. It's a fund, an operator I've worked with and myself started about a year ago because we saw a gap to support early stage investment firm in digital health and healthcare tech, and really support entrepreneurs from the healthcare angle. You see a lot of tech dollars going into healthcare. they try to do really B2C models for the most part. But if you try to have an impact on the healthcare system, you need to go to the heart of where our healthcare system is at right now. We invest in late seed stages, Series A and B and C. We can really support the growth of our companies to the long term, given the respective backgrounds we have. We're based in Chicago because it has a dense healthcare ecosystem. If you look at corporations, headquarters, health systems, there's really a lot to do here for pilot deployments, customer acquisition. And there's also a lack of significant early stage capital in the area. What impact investing means to me? Well, when you think about healthcare, it's really around 3 pillars. Can you improve patient outcomes, and can you demonstrate those outcomes in a clinically validated way? Can you really decrease costs, and not just at a high level, $3 trillion industry with a lot of waste? Can you actually demonstrate efficiencies, and can you expand access, which is a major issue in this country with the number of people that actually do not have proper access to healthcare. And again, the pandemic further highlights it, the have and have nots of our system. So for me, impact investing is we screen out companies that we don't think in healthcare are going to move the needle in any meaningful way on the 3 pillars I've just described. But we also put in place KPIs to make sure that our companies have an eye on the impact they're supposed to deliver. And that's not just for the purpose of reporting. That's because that's the heart of what those businesses are supposed to do, and that's where we start to actually create a successful business. On to you, Vera.
Thank you. Hi, Ruchi, same question to you.
Thank you, Vera. Hi, I'm Dr. Ruchi Dana. I'm a medical doctor, and then I did my MBA from Stanford, and I'm logged in here from Dubai. I represent our own family office, Dana Group, and we are active investors in the healthcare space. And the reason for choosing impact investing was mainly to even differentiate ourselves from other like VCs or sources of capital around in the region, because like if you just wait for startups to apply or like wait for the direct investments to come, then you'd never be able to like get the best of startups. So like we try to differentiate ourselves by having this impact angle. So like people know that this is where they can go if they are looking for actually making some sustainable business models and looking for an impact angle. And we have seen like these the investments that we have made are much more resilient to the crisis situations, even like the COVID-19 crisis. They're much more resilient, and they're able to come up in the reins of all the dangers that are there. So that's been a good approach. So for us, impact investing is mainly to look for other factors apart from just the financial returns. And we focus quite a lot on diversity on boards, employee wellness. These are the main factors that we focus on. And we try to make sure, like at least in the direct investments that we do, we try to make sure that we are able to bring that change in the organizations. Apart from that, we are also LPs in some of the VC firms. And as a family office, we are not very big investors in these funds, but like we try to do ourselves a good job in terms of making a little bit of change in terms of like the ESG funds that are out there.
Thank you.
Thank you.
And Emma?
Sure. Nice to see you all, and thank you for having me. I am Emma Sissman, and I am with SJF Ventures. SJF is a 21-year-old impact venture capital firm here in the US. We've raised 4 funds over the course of our history and have deployed capital into over 70 portfolio companies to date. We focus both on environmentally and socially focused sectors, so everything from clean energy and circular economy and sustainable foods on the environmental side to health and wellness, in education and employment on kind of the social side. So a really multi-themed fund investing in a broad set of sectors. And we have offices across the country, so based in Durham, North Carolina, that's been our headquarters since we were first founded, and also have small offices in New York and the Bay Area, and invest nationally. So we have portfolio companies, obviously in kind of the hotbeds of venture capital in Boston, in San Francisco, in New York, but also many, many companies outside of those spaces. So look to diversify by really exploring deal flow from all over the country. Typically investing in Series A and B rounds, although we do have some flexibility to go earlier or later, and really try to be an engaged partner for our portfolio companies, so often serving on the boards. And we have a pretty big team for our size fund, which allows us to really dig in with companies and add extra bandwidth to their teams to accelerate impact and accelerate value while we are partners with the company. So my role is a little bit unique. I am an associate, but focus the majority of my time post-investment with our portfolio companies. So support some on the deal flow and investment side, but find myself really digging in the weeds with companies. We design not only company-specific kind of projects and initiatives that are impact related, but also look across the portfolio at how we can take lessons that we've learned over our history and apply them at other portfolio companies. And to me, I would say that impact investing is not only investing in business models where impact is embedded, such that as you help the company scale, you can imagine the impact inherently scaling there too, but also adding that value to accelerate impact. So at SJF, we call it bending the curve on impact. It's really thinking about ways that we uniquely can contribute and bring kind of a different angle to the companies to help them build carbon models or help them explore what their most vulnerable population of employees might want from their employer. Things like that go beyond just scaling the business model that is impactful. And the other point I would make is extending our reach beyond the walls of just our firm. So we like to report our impacts publicly. We have an impact page on our website. We publish impact reports and case studies about the work we're doing and what our companies are achieving. So really focusing on outcomes and results and efficacy and trying to share lessons learned and share the impacts that our companies are achieving with the broader industry, as well as think about, the new frameworks that are out there and how to measure and manage for impact in the best ways and collaborate with one another to really share best practices.
Thank you. And Mendy?
Thank you, Vera. It's great to be on a panel with such other great panelists, and thanks everyone for having me as well. So hi, I'm Mendy Yang. I'm an investor at Soma Capital. We're a seed stage fund based out of the San Francisco area. We're pretty industry agnostic and invest across not just the US, but other geographies as well. So at this point, you might be wondering, well, what's kind of her impact angle? And she hasn't talked about clean tech or healthcare and any of the cool stuff that the other panelists mentioned as well. So I'll just start with my definition of impact investing, which is even at a broader tech-focused fund, I think we really think about impact in a broader way, which is number one, we want to back brilliant founders who are really changing our civilization. That's kind of our tagline. And we kind of think about impact in three ways. So one is really that model, which is not just investing directly in anything that kind of has an explicit impact model, but anything that can touch the lives of a number of people across a number of geographies as well. And then the second part is we try really hard, and I know another panelist mentioned this as well, to really promote underserved communities within ventures. So backing women founders, connecting them to each other, as well as minority founders and other types of founders as well than kind of the traditional profile that you might see in the Valley. And then the third part is really making sure that we can democratize capital as well. So the reason we invest a lot in emerging economies is because we think there's so much talent there, and it's always great to meet other entrepreneurs outside of the Valley as well. And one of the quotes that I wanted to share is we work really closely with Y Combinator, and I had heard Michael Saibo say, what causes him to regret the most when making investments. And he said, it's not really about, missing out on the next unicorn. It's actually, if you don't fund someone, you actually end up missing out on potentially backing a startup that would otherwise have maybe not gotten the funding that they needed and really, made a difference in some entrepreneur's life. So I would say in the third bucket, we try to think about it that way as well, which is to really democratize capital and be able to extend financing to entrepreneurs who may otherwise have not met that investor or may not be able to take that first step in their venture as well. So those are kind of the three prongs for us. In terms of my background, I actually joined the venture community pretty recently, just this past May. Prior to working for Soma, I was at Vista Equity Partners, the software private equity firm. So yeah, it's been a great journey into venture, and I think it's so much more awesome to be able to meet companies earlier on and really invest at an early stage as well. So super happy to be on a panel with everyone here, and thanks everyone for attending.
Thank you all and welcome. So the first question that I had is on metrics, KPIs, reporting. So it came up in a couple of your introductions, and it's a question that I always ask myself. Like when someone says they are impact investing, how do you measure that? So financial outcomes, are somewhat simple to report on and to measure, but what are very specific metrics that you track when you want to see if the companies that you are looking to fund, or maybe that you already have funded, are on track with the impact that they hope to get? So I'll send it over to Michael first.
All right, thanks. So we think about impact pretty rigorously and quantitatively. We're unapologetically impact first as a fund, although we view any investment we do as potentially returning the whole fund if in a success case. So I'll try and hit on 4 things as quickly as I can. First is Prime's Investment Advisory Committee. For any company we consider making an investment in, we convene this committee, which is about 20 of the most active and successful climate tech venture investors. They assess whether Prime's unusually patient, risk-tolerant, and mission-aligned capital is needed, and 2, if successful, could the company attract follow-on capital from more conventional sources? If the committee determines that this company is not a fit for us, like for example, they could go raise 10 million in venture dollars now, that's great. It's great for the company, it's great for the world, but it's not a fit for Prime. Post-invest, or actually still pre-investment, we do emissions reduction potential calculations, or more specifically, we have a third party do an emissions reduction potential calculation. We investors cannot put our thumb on the scale. So these 2 steps make sure we're on target with respect to our investment mandates, which are gigaton emissions reductions potential. We have a generalized version of this tool available online. If that sort of thing is of interest to you, I know I'm a big energy data nerd. This is available online at cranetool.org, C-R-A-N-E tool. And then post-investment, we do a series of impact audits. We're in the midst of our first 5-year impact audit to make sure that both our portfolio companies and us as an organization are still on target. At such early stages, I'll just say for the companies we invest in, again, we're seed stage investors. At such early stages of company development, these are most often aligned directly with business development. If the company does not make it to a Series A or a Series B or meaningful customer attraction, there's no way they will make the impact that they hope to do in the world. And I think we're probably going to get to some more specific company examples later in the panel, so I'll hold off on that thought for then.
Sounds great. And Emma, I know that you are making slightly different investments. What are some of the metrics that you track and report on?
Yeah, sure. So similarly to what Michael described, our conversation around measurement starts pre-investment. So we have a pretty built out analytics framework that we work through in the diligence process with our companies. So everyone on the investment committee includes an overview of that within all investment recommendations. So really the conversation on impact starts pre-investment. And part of that is designing and brainstorming metrics that we might measure post-investment that are company specific. So thinking again about the outcomes that the business is achieving, where we expect those outcomes to be a year from now, 3 years from now at exit. So trying to project in what our expectations might be and understand that business models change and companies kind of flex as they grow. So, if they beat that benchmark, that's great. If they need help getting there, if the benchmark changes, that's okay too. But really trying to incorporate that pre-investment. And post-investment, SJF has measured impact metrics since our founding. So we were initially founded as the Sustainable Jobs Fund in 1999. So jobs have always been really important to us, the jobs that our portfolio companies are providing and creating. So some of the metrics that we ask all of our companies are really workforce specific, around diversity, around direct hires versus contract workers, around wage. So we have a metric set that every single company fills out. And for many years, that was through the Global Impact Investing Rating System out of B Lab. So all of our companies participated in gears. They completed the whole B Impact assessment, and our funds were able to get rated kind of the umbrella portfolio level. More recently, we've kind of pulled that metric set down a bit from the 200 plus questions to more around 40 to 50 that are workforce related, again, that we ask all of our companies. And at the company specific level, we do design 3 to 7 metrics that are core to what they're doing. So it could be around scale still, it could be around outputs, it could be around, you know, student served or patient served, for example. But what we've tried to be really intentional about is getting at more specific metrics that measure the change that's actually occurring for beneficiaries. So maybe it's, you know, to what degree was that patient's A1C level improved by the company's intervention, or what is the amount of micro scholarship dollars that a single student on average would earn through that platform. So really company specific bespoke metrics. And the last point I'll make is that we try not to over aggregate. So across the portfolio on the social side, we talk about jobs holistically. We look at jobs at the aggregate level across all companies and for each fund. But on the environmental side as well, we have a carbon model built for all of our environmentally focused portfolio companies, so we can measure an aggregated carbon mitigation number. But beyond that, we really try to keep the business models authentic and be able to communicate the depth of impact by reporting company-specific metrics versus an aggregate number of students served or an aggregate number of patients served, for example. So we can really give the color and provide a good understanding for what that company is accomplishing. Again, reporting publicly through impact reports and on our website to try to share what our companies are accomplishing year over year and even more frequently than that.
Lovely. And Julia, in healthcare, how do you even get to the numbers that you're reporting on? What are they based on?
Great question. And as I mentioned, there are really 3 pillars we're looking at when we talk about impact in healthcare. And I'm sure Ruchi Dana will be able to add to that as well. It's improvement of patient outcomes. It's decreasing costs in a meaningful way, or expanding access. And so because we touch such diverse pillars, you can't really, in a quantitative way, compare companies to one another. So we've done 2 things. First, in a pre-investment stage, we've developed a scorecard so that we can make an assessment as to how each company is going to score against the 3 pillars I've described. And first, many companies that are not impact oriented don't even make it to the scorecard, but we have also eliminated companies because we thought the score is just not high enough. And it could be a company or an investment that does good returns, but then that's just not for us. The second thing is when we run investments and they become our portfolio companies, we put in place KPIs around impact. And in some cases, those could just be operational KPIs, but we sort of take it to the next level to say, if your mission is to, for instance, and it's a real case, improve mental health of patients, how many patients go through your platform? That's an input KPI that's always worth tracking. But what's your output KPI? It's how many patients do better compared to cohorts that would otherwise not use the tools. You can do those in clinically validated environments and even set up a trial around it, or you just keep tracking it as a good KPI, because at the end of the day, that's what will differentiate your business as well. And so these are the sort of 2 angles we take to the question of tracking impact.
Yeah, and sorry, just to follow up on that, the scorecard that you're putting together, is that a proprietary list of metrics, or is that public?
Yes. No, we came up with it based on our experience and the type of metrics we wanted to track. And really, it's complex and it gets into the weeds in terms of improving patient outcomes. What does that mean, right? Is it longevity? Is it quality of life? Is it in a specific condition? At the end of the day, because we're really comparing apples and oranges, even though we're in healthcare and we sort of should be able to harmonize a little bit, every company, if you're looking at chronic care management disease in mental health, they're going to do something slightly different. So we have to come up with a scoring system to be able to compare them. And so that's the approach we've taken there.
Yeah, and Ruchi, kind of in a similar vein, how do you track the impact of your investments?
Yeah, it's really good to hear about Julia's method, because we have been completely struggling with that approach, because and these days we see a lot of startups that are focusing on outcomes, and it's really changing the entire scenario of healthcare. And I think even the healthcare expenditures would go down because of that. But for us, like we have a criteria, it's just like a basic sustainable investment criteria. And based on that, we do the pre-screening of startups. If they fit the bucket that they're sustainable and they have like certain impact angles to it, we then go into a deeper dive and do the due diligence. In terms of like the investments that we have made, in terms of funds, we actually rely on the funds to provide us the ESG reports. And again, like it's like there are certain funds that are much more proactive in terms of like delivering those reports, but then there are others that are like not so sophisticated, so they struggle with doing that. But like we are seeing a lot of changes in that aspect. In terms of direct investments, it's mainly like we try to influence wherever we can in terms of like at least having gender diversity and like equal pay, and employees. We focus a lot on employees. We in fact have similar to a net promoter score, we have an employee net promoter score, so that shows that whether the employees would be willing to recommend that company to others. Because in this age of millennials and in startups, we see like every 6 months people are changing their jobs, and it becomes really difficult to sustain a company if you keep on like just training the employees all over again. So I think these are the factors that we're currently looking at. So in terms of funds, we mainly focus on like getting the reports from the funds and relying on that data. And in terms of direct investments, we have like some sort of not as sophisticated as Julia's methods, but we have our own way to assess whether it's making an impact or not.
Yeah, I love it. And kind of on the topic of gender equality, Mendy, for supporting more female founders or minority founders, do you have any metrics that you track internally?
Yeah, definitely. So we don't have, more of a methodical method for tracking impact in the way some of the other panelists mentioned. But I think the way we think about it is what's kind of and I think Julia touched on this a little bit too, but I think the first question is what's kind of the North Star question or impact that you're trying to make as a startup. So for example, one of our founders, she started a bra company that essentially aims to make women feel more comfortable with the bras that they're wearing by creating a much better bra that is temperature controlled and able to fit a variety of body sizes as well. So I think in that case, what we try to do is we first and foremost think, okay, like what's kind of the core mission here, and then after that we think about TAM as kind of a proxy for how many people or the volume of the impact. So in some sense, it's not that different from kind of assessing any other investment. It's really thinking about it from a more impactful angle as well. And then in terms of just how we as a firm track kind of the impact that we're making with respect to supporting more women, as you asked, we definitely track how many women founders we have in the portfolio. We also track number of minority founders. We also are pretty public about all the investments we make in the emerging markets as well. And that's something that's really important to us. We report on it to our LPs as well as to our founders via a newsletter as well. So it's a way for us to always be keeping that in mind as we're kind of fulfilling our broader mandate of looking for just generally disruptive solutions in each vertical as well.
Yeah, thank you. And I love that you brought up one of the companies. I love case studies. I think it's a very good way for people to understand how you explicitly think about these questions. So I would love to build on that. So Ruchi, could you, of your portfolio companies, is there one that you're currently particularly excited about? And if they are already an existing portfolio company, what was the reason that kind of brought you over to say yes to the investment decision?
Sure. Like I'm really happy about one of the portfolio companies in South Asia. It's actually a genetic and a microbiome testing company. So they're focusing a lot on longevity, and like later on the vision is also to go into personalized medicine and also like the kind of impact that they're doing is really huge, because they also are targeting rare genetic disorders, and which is a huge market here in the Middle East, because like a number of marriages happen within the same family, so that causes a number of rare genetic disorders. So I think there's a they're doing a lot of impact in that angle, and that's their own business model. So that's something. But apart from that, the leadership team is also very diverse, and there are a number of scientists. But again, like they have a very good and diverse team, so that helps out in terms of like looking at that angle. And apart from that, I've seen like even in the board, like there are enough women on board, and there's in terms of the like pay, we have realized that it's a good company, and we track the employees very well. So we haven't seen much attrition in that company, although it's like a very early stage company. It's been around for maybe 1.5 years old, but there hasn't been any attrition, so that's a good thing. So these are like some of the ways that we are tracking things still now, but we don't know about the future, but we can see that they're about to bring about a huge impact, and the market is just right now for such companies, and they're focusing a lot on outcomes as well in terms of like wellness and working around like how to bring down the cost of these tests as well.
Well, thank you. Same question to Julia. Any particular portfolio company or perspective that you're excited about right now?
Sure. There is a company that we've spent a lot of time with in the mental health space that provides essentially measurement-based care. So if you think about mental health conditions, they are really 24/7, right? Bipolar disorder, anxiety, depression, and care in an outpatient setting is most of the time provided once or twice a week. And so there's a lot of the disease that just gets missed. But by actually tracking symptoms over time, providers are able to see how their patients are doing. And the patients themselves, there's now a clinical study that demonstrates if they see their own progress, it creates a positive feedback loop that further improve their conditions over time. So we have now actually found a digital tool that allows to improve patients' conditions in the mental health space. And so that's one I'm really excited about, because in general, mental health is a scientific area where really there hasn't been as much data as I like, or as we can find in others, because it touches so many parts of the brain, of mood disorders, hormonal disorders. And so now by being able to aggregate so much more data on patients and being able really to see in a nuanced way what goes on in those conditions, we'll be able to advance the field in a different way. So this is one area that and one business I'm really excited about.
I gather that especially during lockdown and COVID, that company is even more relevant than it was before.
Yeah, absolutely. So obviously it creates tailwinds from an investment standpoint, but I would say at an impact level, the CDC director now came out saying there are more deaths related to suicides than there are deaths related to COVID. We're really looking at the second invisible pandemic right behind. I've had about 15 different discussions with clinicians over the last months that all said when we as a population undergo a trauma event, which actually now COVID qualifies for, the real symptoms don't emerge during the event. We're all in sort of fight or flight mode. We're still trying to fight against it, and let's move forward. It will happen once it's tempered down, which hopefully will happen once the vaccine is in place. So any number we're looking at right now, unfortunately, will rise dramatically once COVID is over. And so we just need more tools like that to help people go through the conditions.
Yeah, completely agree. Same question, Emma, any particular portfolio company or perspective that you are excited about right now?
Sure. Yeah, happy to highlight an existing portfolio company called Jopwell, JOPWELL. It's the leading career advancement platform for Black, Latinx, and Native American students and professionals. So actually I first invested in the Series A in 2017, so a couple years back. And we have a partner who's explored education and employment technologies extensively. He leads our investment practice there. And what made us really excited about this company was that it was connecting these underrepresented individuals, both at the student level and professional level, to really exciting career opportunities, but also selling through a B2B model to big companies across the US. And since we first invested, they also rolled out kind of a lower touch platform for small and mid-sized enterprises and businesses as well. So companies have a direct pipeline of qualified, exciting candidates to increase their diversity recruiting efforts, but also just to find good talent. And I think especially now with the Black Lives Matter movement and all the really needed conversations that are happening in our country and more broadly today, it's really accelerated the company to the forefront of the conversation. They've been a leader in this for many years, but now companies that didn't know about them are learning about them, coming to them and asking, how can we get more involved? How can we improve here? And I think it's really timely. And I would encourage anyone who's listening to the webinar, if you are interested in making a profile on JobWell, it's quite easy to sign up. It's almost like a LinkedIn where you can build a profile, a resume, talk about yourself in a way, and then be able to connect to these opportunities at really exciting companies. So getting at diversity in a meaningful way, kind of filling the pipeline of potential candidates, and bringing the conversation to the forefront. And they have a whole blog and a place on their website called The Well, where they put out articles and thought leadership pieces about the importance of diversity. So just wanted to highlight that, especially as those conversations are happening really across the world today. And if anyone is going to SOCAP next week, it's a big impact investing conference, usually held in San Francisco. It'll be virtual this year for the first time. The CEO and our partner are sitting down for a fireside chat to talk about what goes right and what goes wrong in diversity recruiting at companies. So should be a really interesting kind of honest and transparent conversation.
Yeah, I love that. Is that panel open to the public?
It's for SOCAP attendees. So I figured some of the folks on this might have also signed up to go to that conference because it is such a leading impact investing conference, but just closed to attendees.
All right, got it. And Michael, same question for you on the portfolio or perspective.
Yeah, sure. So I'll highlight a company, Vera, that you know well. We are co-invested with Vera's fund Safar Partners in an MIT spin-out called Via Separations. It's founded by MIT alum Shreya Dave. And what they do is industrial separations, which is not something you often think about, certainly not a hot venture category, but it's extraordinarily energy intensive, and it's a legacy industry powered by fossil fuels and in need of innovation. If we take pulp and paper, which is their first market as an example, you most often accomplish the relevant separations there by boiling water, leaving your desired material behind. If you step back and think about it, it's a little bit like, and I'm going to steal Shreya, the CEO's analogy here. It's a little bit like boiling a pot of water, putting the pasta in, and then boiling off all of the water to get to the pasta in the bottom. Where instead you might want to put it through a strainer, which is a lot easier, uses a lot less energy, and it's just more efficient. Via has developed a membrane-based separations technology that is essentially a strainer to keep only the molecules you want. So we invested in their Series A alongside Safar Partners. Actually, during COVID, the demand for paper products, which again is their first industry, has gone way up, as I think everybody in this virtual room can probably attest. To that end, they're doing their first pilot now with a paper mill, and we're just really thrilled that we were able to invest and seeing them through some of their first milestones.
Great, thank you. And I just have one last question before I open it up to the questions we received from the audience. I'm going to address it to all of you, and if you could answer it fire style in 1 or 2 sentences. What is your favorite part about your job, Mendy?
Definitely getting to meet tons of cool people every day.
Julia?
Discovering new innovative ideas and businesses and partnering with talented people.
Ruchi?
Being able to bring about an impact in the healthcare space.
I love it. And Emma?
Digging in on really different business models across different sectors on a regular basis and learning more every day.
Wonderful. And Michael?
So we take 4 to 5 pitches a week, and speaking with the entrepreneurs is the part that really blows me away. It's humbling to see such bright, talented people putting their careers on the line for something they believe in.
Love it. All right. So I'm opening up the question and answer section. So if you, the attendees, have any additional questions, please put them there. I'm going to read them out. So Thane Kreiner asks, and I love this question, given the complexity of impact assessment, how do you think about the cost of impact reporting and factor that into your investment and return expectations? Who should pay for impact assessment? Anyone want to go first on that?
Sure, happy to speak to that quickly. So I can at least speak to how we at SJF do it, and we also helped found a industry association. So I've heard bits and pieces from other funds through that called Impact Capital Managers, but we have a pretty big team, and we have a couple folks that part of their job description, including myself, is to work on our impact measurement, management, and acceleration projects and work. So I think that as a longstanding impact investor, measuring and managing has been something really core to what we do, and we actually think drives returns, higher returns, by being an impact investor and operating in this way. So, you know, it's a priority, and so we have team members who dedicate time to do it. When it comes to impact verification, which is, you know, it could be GEARS, which we used for many years, where it's an assessment and our funds get rated. You know, some LPs demanded that we did that. We chose to do that. That was part of our decision, and something we thought was really important to get that third party involved in our work. Now there are all these other options out there. I think Michael touched on an audit. There are impact verification reporting and consulting groups. And so I think the funds just ask themselves, you know, is it coming from the LPs, or is it core to what they're doing in their impact practice and something that they really want to prioritize and dedicate resources to? So I would say it varies on a fund to fund level, but you know, some funds have the resources and kind of the human capital power to put towards impact, and others really rely on outsourcing and spending some extra resources externally for that.
Yeah, but then in your case, the cost burden here falls on the fund and not the portfolio company, for example.
Correct. Yep. It's not the portfolio companies. It's us bringing the measurement questions to them and really leading the assessment, that the work that goes in, and they're just responsible for providing the data and being that partner.
Got it. Thank you. And I saw Ruchi, you wanted to add to that.
Yeah, I just wanted to add, like, I think there are many sophisticated funds who can maybe take a lead, because even the kind of standardized answers that we get, I don't think that's really appropriate. There's a lot of revision that could happen in terms of the scorecards as well. So I think, like, it's the onus should be on the more sophisticated funds who are focusing on impact, if they can, like, even work on the framework a little bit more, because I can see, like, some of the firms are just struggling to match the scores, but there are other firms that can actually do a lot more in terms of the metrics and the measurement factors, because there are some gaps in terms of the measuring of ESG factors right now.
Got it. Thank you. And any of our other panelists want to add on to that?
I'll just add a twist to it. I firmly believe that it's our role as investor to lead the charge on measuring impact. I think it's also our role to help our portfolio companies to track that data. It's part of doing good by doing well. And I don't think this is necessarily a cost we should push on our investors either, right? That's part of our role in the ecosystem.
Got it. All right, so I have the next question from the audience, which I also think is a very interesting one. So Philip Shapira asks, how do you address the social dilemma problem? For example, it all seems good when a new tech company starts up. The example is Facebook, but as it scales and grows large, unanticipated yet major negative societal implications emerge. So how do you, I guess maybe a little broader, what do you do when the impact is maybe not the focus of the company anymore as it grows? Michael, do you want to go first?
Yeah, I can chime in. So this is something we think about a lot, and it's really important to us. So there's a number of ways that we can attempt to do this. One is maintaining active governance roles, and in every investment we make, we seek to take a board role, whether it's a board seat or an observer role. In some cases, and then just like zooming out, in some cases, you invest in a company, and that company, if successful, can do one thing and one thing only, and that thing is impactful in the way we hope. In other cases, you could imagine kind of platform technologies that could go a variety of different directions and attack things that are climate relevant, not climate relevant, or actually adverse to the climate. And in general, if we were to move forward with a company like that, we would want assurance, potentially, in the form of the investment agreement, but certainly at the making a judgment call on the founders level that they will stay on target. So it's a really important question, and it's something we're thinking about a lot as seed stage investors, with the responsibilities that can allow us to take on.
Yeah, thank you.
Yeah, I can just add on to it. So recently I read in the UK, they have come up with 3 more changes in terms of like having employee advisory panels, employees on the board of directors, or NEDs, like non-executive directors. And I was thinking, like, apart from these additions to the corporate governance, they could also be like customer advisory panels and things like that. So like to have more and more stakeholders involved in the main corporate governance, I think that would be a way to go about it. Thanks.
That makes sense.
Yeah, and a classic one in healthcare is you are moving forward a solution that is going to improve patient outcome, but adds billions of dollars of cost to society for marginal improvements of life. So it's something we think about a lot, and that's why we took this 3-pillar approach while defining our scorecard, so that we can keep it as a balanced way of moving forward. I'd say you can't make unintended consequences a fear that becomes your North Star when you drive investments, but that's certainly something you should keep an eye on and reevaluate over time. So in each of the investments we look at, this is something that we obviously keep in mind as we make decisions.
Great. So the next question comes from Anatole Menon-Jonathan. My question relates to impact metrics. Do you make funding conditional upon milestones met? Is there a hurdle that needs to be passed first before you can make an investment?
I can take a stab at the question. You can, there's a variety of metrics we look at when we make an investment. And in some cases, there are entrepreneurs and business models we like, but they're not quite as ready as we'd like them to be to drive an investment. And in that case, there is a frank conversation around, we need you to hit that milestone. That might be an operating number, that might be a revenue number, that might be a number of customer number, and then we can re-engage. I'd say once we have invested in a company, we can have discussions around how do we follow on, at what milestones and whatnot. The reality of the world is it's a lot more dynamic than we can so forge a path towards that. I hope it helps.
And I saw Mendy, I think you wanted to.
Yeah, so we don't have explicit milestones or rules, but I think one related point that I wanted to bring up is that I think, especially for us with a broader focus, but with kind of the more social impact angle, we first and foremost assess what the core metrics are, and still do our formal analysis of, you know, how big is the TAM, like how sticky is the solution, like how many people are you impacting in general, like where, like what's the extent that you're kind of reaching people with your solution. And I think it's kind of like we're evaluating all of those factors at once, but we don't necessarily lower the bar on the financial side to make an impact investment. So it's not like, oh, like, you know, we see this company that doesn't fit our thesis, but it's a woman founder, and then we're like, okay, great, like we're just gonna invest because it's a woman founder. So I guess if there is any sort of criteria that we do evaluate, it's first and foremost, does this kind of fit our wider thesis and the basic metrics that we look for in all of our seed companies. And then if there is like a especially impactful angle, or if there's the diversity angle, I think that's considered more of a highlight and something that we definitely want to be pushing. But I think we try to parallel track everything that we care about and don't necessarily compromise one for the other as well.
Thank you. And then a question I would love for you to address that I think is very high importance to our audience. So Sergio Medina asks, how do entrepreneurs best find the impact investment firm that matches their work and their profile? And how do entrepreneurs break through to those impact investment firms in general?
Yeah, so
Mendy.
oh yeah, I can start. Yeah, so I think the first thing is to really understand kind of the investment style of the firm. So for example, if you are like just random, if you're a female founder and you're working on a clean tech solution and you want your investor to be deeply knowledgeable about that space, it's great if you come to us because we do want to support you. We think you have a great mission and we want to be pushing both aspects. But at the same time, for you, you should think about like what type of expertise would we provide as investors, and would it make more sense to go to someone who is more explicitly focused on clean tech, for example, like some of the panelists here, or same thing if you're in a more specialized industry. So I think it's a balance of finding a firm that cares about the metrics that you care about as well as your mission, but also finding someone with the relevant expertise to really help push things forward at the early stages, because the whole point of taking money from someone for an entrepreneur is to really be able to position yourself well as a long-term partner, right? So I think it's really a combination of thinking, okay, like how can this firm best help me, and then how do I kind of fit into their investment thesis? And then at the end of the day, I think you should also think about them as a long-term partner. I think a lot of people often say like a venture firm and an entrepreneur, it's kind of like a marriage of sorts. So I think at the end of the day, you should also think about how well you can get along with that person, and if you're just aligned in general as you're building that business, because I think you're both kind of in it for a long time, like 5 to 10 years at least. So just some of the factors to think about.
Yeah. Anyone want to add to that?
Sure. So first, you're right to ask the question. It's not something that there's some central, easily accessible and updated database. So what I've done, just learning the industry for myself over about 1.5 years now, is just total immersion to the degree that's possible. So, in the climate technology space, which is what I focus on, there are various newsletters, podcasts, talks you can watch, things to read. There are a couple databases you can find if you dig enough. And I've just tried to immerse myself as much as humanly possible to see who else is out there in this field. That list is changing all the time, of course. And so what you can do is sort of follow and track these over time and start pattern matching to see what funds tend to invest in what sorts of things and get a flavor for what they do. But since there does tend to be that asymmetry, that information asymmetry between investor and entrepreneur on the landscape of investors, one thing you can do is just also ask investors you talk to for recommendations. Who if this isn't in scope for you, who do you think this might be a right over the plate for? So those are just my quick thoughts on that.
Yeah, any additional comments? But yeah, thank you. I know it's a very opaque landscape if you're on the outside. It's very hard to learn that. Yeah. All right, perfect. So we are almost out of time. So I am going to ask the audience, if we have not gotten to your question, you can send me an email with your question, or if you want to ask a question to one of our panelists directly, you can also send me an email and I will forward that. If in those emails you can include a little information about you, just to give us some perspective, that would be very helpful. I'm going to put my email address in the chat right now. This is my, I can't talk and write. Here you go. This is my alum email address. So feel free to email me there. I will try to get to your email as quickly as possible. And with that, I love to thank all of our attendees, all of our panelists. Thank you so much. And thank you so much, Moana and Sayuri, for organizing.
Thanks for having us.
Thanks, everyone.
Bye.
Thanks for joining us. And for more information on how to connect with the MIT Alumni Association, please visit our website.